podcast is brought to you by Daba, your most comprehensive platform for investing in African stocks, bonds, and managed funds. You can download the Daba app on your favorite Google and Apple app stores. The BRVM closed the Thursday, September 25th session in positive territory. Investors can be pleased. Several indexes are climbing, and some flagship stocks delivered very strong performances. Let's take the time to look together at what this means for you. Investors, entrepreneurs, or simply those curious about West African markets. We'll walk through the biggest gainers, the index performance, and the bond market to better understand today's dynamics. Agriculture once again takes the spotlight. At the top of the list, we have SAPH Côte d'Ivoire, closing at 7,615 francs CFA, up more than 7% on the session. For those not familiar, SAPH is a major rubber producer in Côte d'Ivoire. Seeing such a strong rise in the share price is a signal that global demand remains robust, and income prospects for the agricultural sector are healthy. For you, the investor, it is a reminder that the primary sector remains vital in this region's growth story. Right behind SAPH, Oragroup Togo impressed. The share price jumped more than 7% as well, ending at 2,405 francs CFA. This reflects greater investor confidence in the resilience of the regional banking sector. For individual investors, this means that West African banks continue to serve as strong, reliable pillars, even in volatile conditions. Another standout was SOGB, the Grand BRVM Rubber Company. It closed at 8,245 francs CFA, almost 7% higher in just one session. That is remarkable. Like SAPH, SOGB benefits from the strength in the rubber market, but also from broader agricultural diversification. For investors, this is a powerful reminder that agriculture remains one of the most important growth engines across West Africa. There were also notable mid-tier risers. Sycor Côte d'Ivoire advanced more than 4%, and NEI-CETA gained nearly 4%. Even these less liquid names are catching the tailwinds of the market's positive momentum. Turning to the indexes, the BRVM Composite Index, which tracks the entire market, rose 0.34% to 325.18 points. That might seem like a small increase, but it is a clear vote of confidence. Since the start of the year, this index has gained more than 17%. For investors, this is a sign that despite the daily ups and downs, the overall trajectory is firmly upward. The BRVM 30 Index, which focuses on the 30 largest companies, also edged higher, up 0.24% to 161.05 points. This shows that the major names continue to drive the market's momentum. The BRVM Prestige Index, composed of the most solid companies, gained slightly by 0.07%, closing at 137.16 points. Since January, this elite index has advanced nearly 20%. For long-term investors, this is an excellent signal. Quality stocks continue to deliver steady performance. Sector trends deserve attention too. Consumer staples surged almost 2%, with an annual increase of nearly 87%. That is extraordinary. For you, this shows that investing in essential goods such as food and household products remains a winning strategy in Francophone Africa. The agricultural sector once again impressed, up more than 5% on the session, and up more than 82% since the start of the year. If you are searching for growth, here it is. Not all sectors were positive, however. Industrials fell by about 2%, and utilities lost over 2% as well. This shows the need to be selective. Not every sector moves at the same speed. Now let's look at bonds. The market capitalization stayed stable at about 10,185 billion francs CFA. Trading volumes were low, with just 3.8 million francs CFA exchanged. On the government bond side, there was activity in several maturities, especially 10-year bonds from Mali and both 8-year and 10-year bonds from Senegal. What does this low level of activity mean? For institutional investors, it reflects a wait-and-see attitude. Yields remain attractive, around 6 to 7%. For those seeking stability, government bonds still offer solid security, especially when stock markets fluctuate. Private issuances also made an appearance. Baobab, Sonatel, and others continue to offer strong coupons near 6 to 7%. For investors who want balance, combining dynamic equities with steady bonds remains a smart strategy. So, what does all this mean for you? First, the strength of agriculture is a loud signal. Investing in companies like SAPH or SOGB gives you exposure to global demand for raw materials, which remains a driver of returns. Second, the indexes confirm that the overall market trend since the start of the year is positive. For everyday investors, this is the right time to think about positioning in promising sectors while keeping diversification in mind. Third, bonds still offer attractive yields and can help balance a portfolio. Remember, a mix of equities and bonds is often the key to long-term investing success. If you want to go further, receive clear recommendations every week, access exclusive analysis, and lower your investment costs, subscribe to Daba Pro. With Daba Pro, you do not just follow the markets, you stay ahead of them. That's all for today's episode. Thanks for listening to the Daba Markets Talk podcast. We'll be back tomorrow with another update. If you enjoyed this episode, please leave a rating, follow us, and share with friends. Remember, this information is for educational purposes. Always do your own research or consult with a financial advisor before making investment decisions. And download the Daba app on your app store to start investing in African stocks, bonds, and manage portfolios through your phone and find other helpful content. Until next time, keep learning and keep growing your financial knowledge.